there's 6 big ways for you to save money on taxes, right? The first one is maximizing deductions.
Okay, well, you say that maximizing deductions. What does that mean? Because I hear that.
Yeah.
So that means you need to go up.
When I say maximizing deductions, making sure that you're properly deducting the things that you're able to deduct. So a deduction is basically, let's say you make $1,000.
Right.
A deduction is an expense, money that you're spending, that the IRS allows you to be able to write off. Is what, when people say deductions, that's what a write-off is.
Okay.
You make $1,000. You spend $300 on something that the government says you can write off, right? Specifically mortgage interest. You reduce that, now you're at $700. They're looking at that $700 to determine your tax rate, and then you're going to get hit with your marginal tax rate. Well, the different progressive tax rates or whatever, but just to keep the math simple, let's say it's 30%. That's $700. Now you're at $210 on taxes. So that's the way it goes. That's the breakdown.
Got you.
So 9-to-5ers, you could look into doing what are called itemized deductions. So there's different categories for that. There's some related to your home, when, as I mentioned, mortgage interest payments. You got property taxes. There's things related to medical and dental expenses. Right. You got things related to charity. As well.
Charity, church,
etc.
Tithe, stuff like that.
So those are some of the categories as far as the itemized deductions are concerned.
Okay.
Then, for 9-to-5ers, you have retirement. That's going to be a key way for you to save money on taxes as well.
Okay.
9-to-5ers, usually you're going to have an option to be able to put money into a traditional 401k. Basically, retirement account. We all know that's a good thing to put your money in.
Absolutely.
You want to make sure you can maximize it if you're looking to build your retirement that way. And do what's called a pre-tax contribution. So basically, before the money comes into your pocket, it automatically gets deducted from your paycheck and goes into that retirement account, and that's going to give you a deduction there. So as far as 9-to-5ers are concerned, those are probably the 2 big ways to save. You got anything else?
I mean, aside of that, it's okay, turn your hobby into a business, right? Because hobby expenses are only going to be deductible up into that hobby income. And the thing about earning income ordinarily, which is through your W-2, when you have a business, it's also considered ordinary income. And then when your income categories match, you can use one to offset the other. So you can earn ordinary income from your 9-to-5 through your W-2, and have some, ordinary losses from your business that can now offset your ordinary income from your W-2. So even though you had excess taxes withheld from your pay stubs throughout the year, when it comes down to file your taxes and you put your W-2 on that tax return, once you complete your Schedule C for your small business with those expenses are now eating at the ordinary income you earn from your job, thus lowering your overall taxable income, therefore either increasing your tax refunds or lowering your tax liability.
Michel and Shania, ladies and gentlemen. 9-to-5ers, if you all are not listening right now, you all need to be listening. I think about 50% of you all right now have a hobby on the side, and you haven't taken the opportunity to start an LLC, a legit business on the side. I know this answer, but I want the experts to say it. How hard is it to start a legit business?
Oh, not hard.
I'll
give you a real life example, right? My wife. Loves wine.
Loves wine.
Loves wine.
Okay.
Loves champagne.
Oh, I like your wife.
Yeah. She's all right.
I like your wife, brother. Okay. She like that liquor, boy. Okay.
No, but specific liquors. Wine, the more sophisticated spirits.
I got you.
Right? So the wine.
She a little bougie. Okay.
She a little bougie, right? And she actually became, and because of her passion with wine, what she did was, okay, I love wine. How can I create a business centered around something I love and do something? I'm already doing it. I'm already drinking wine. I'm already traveling and going to different vineyards and stuff like that, doing wine tastings. What can I do? So what she did was she started her career there was a network marketing company that sold wines, and she was doing, and with that company, they're also doing in-home wine tastings.
Gotcha.
So she was doing in-home wine tastings. That was her business. She was generating revenue. They would pay her. She'll come inside the house. They'll talk about the taste, the smells, the smell, all of that stuff, right?
Wow.
And she was able to do something that she loves, and she also loves people.
Okay.
And she loves hosting events.
Yeah.
So she was able to do that and turn that into a business. And now what she's doing now is different wine experiences, right? We just did an event in Atlanta. She came and did like a whole champagne brunch and taught people about the bubbles. And then she ultimately, she's an overachiever, right? My wife has like 100 certifications. She's always studying. She's really big on getting certified in something. She became what's called a sommelier.
What's that?
That's a wine expert. That's like
the
creme de la, that's like the CPA. You. That's the CPA wine person.
Yeah, I got you.
Essentially, you know what I mean?
So
that's like the CPA equivalent of a wine expert. But she basically went through a process to show and prove that she's knowledgeable about wine. She can taste wines and know what region it came from, etc. That's a legitimate business, right? She's gonna host an event this weekend at a cabin. Wine experiences with people doing something that she loves, and she's making money, and it's a legitimate business because one of the things in the tax code is they say that basically if you are in the pursuit of income, pursuit of profit,
right? Really,
the pursuit of profit, right? You want to make sure you're profitable. I mean, you can sustain losses for a few years, right? No more than 3 years, I would say, within a 5-year period,
right?
So you don't get those losses disallowed,
right?
But if you are legitimately in the pursuit of profit, which she is, because she's always looking at her expenses, she's like, this is expensive, I'm not going to do that.
Wow.
Right?
Okay.
Then you can legitimately become a business. And then obviously there's different protocols to make sure you make the business even more properly structured and protected, like getting a limited liability, etc. So.
Yep. So literally, we just call it like turning your passion into profits, right?
Yeah.
Even if you do have a 9-to-5, like what else are you passionate about?
Yeah.
You know, if you like to walk dogs, if you just have dogs and you walk, well, why not walk your friend's dog for, a good price?
Yeah.
But now being able, since you are a dog walker, you can deduct expenses related to even taking care of your dog.
Right.
Because everybody always want to ask, well, how can I write off my dog? That's one way, right? Turn that into another business. So now your dog is an expense, or you can, have your dog model for your business. You can have your dog be a mascot for your business.
I got a beautiful dog. You're trying to tell me I can have her model for my business and I can write off her expense?
Of course. So again, imagine if your dog is a mascot for your business, right? Now you're grooming. That's going to be a deduction. If you have to feed your dog to be on set that day, that can now be a deduction as well.
God almighty. Raven cost me a lot of money.
Oh, shout out to Raven.
I'm about to put her to work. Hey, look at here. Same right here. Stay right. It's model for the company. Good.
Yes, exactly.
Grooming just paid for.
Yes.
Food just paid for.
Yes. A lot of my influencer clients that are on YouTube, I'm like, listen, throw your dog in that video. Because now your dog is a part of your brand. So just like we can deduct a lot of your expenses because you are an influencer, well, guess who's your sidekick now?
What?
Doggy.
Wow. I'm about to put Raven in the set. Stand.
Yes. Seriously.
See, this is the type of information we need to know.
Yes.
Because it's like, it's not about getting over, but it's about capitalizing on everything that we can do.
Yeah, it's capitalizing off of knowledge because the knowledge is there, right? So it's like, it's not like you're doing a disservice to everyone else by doing this. You're doing a justice to yourself. Yeah, and we all should be thinking about how can I put myself first, and that's about putting more money back in your pocket so that you can invest into your future. Yeah. Well, let's be smart about how we look at the knowledge that's present in the tax code and use it to our advantage.
Now, this is black excellence.
This is why we team.
Yeah, man.
I came through with the fettuccine.
Yeah.
She came through with the sauce.
The sauce.
Salt, man.
And a little parmesan.
You're right. Capitalizing what he was saying. This is what we're going to do. Right after the dog. What?
But listen, I would say this, and the foundation piece of it is this, right? So, as she was mentioning, this person has a legitimate business. So that's number one.
Okay.
Now, to be able to write things off, deduct things for your business is 4 requirements. I call those the tax-free deductions.
Okay, wait. Say that one more time. Yeah.
All right.
Tax-free deductions.
Yes.
And there's 4 requirements for that.
4 requirements that the IRS has. And it's an acronym, so it's going to be free. FREE.
FREE.
The first part of that is F.
Yep.
It needs to be for your trade, business, or profession.
For your trade, business, or profession.
Yes.
Okay.
If the expense relates to your trade, business, or profession, that's requirement number 1. So you need to have that trade, business, or profession.